traders. So an update for this week. As you have seen my last two videos, go watch them. I have already been predicting that this year will not be easy, and already especially in Bitcoin and indices I mentioned all the levels, but today we have also some more news. The first one of course, Trump tariffs, and currently the Bitcoin futures with Asian Open started to fall. Also Nasdaq futures, S&P, oil, especially oil, and other related markets start their bearish move. We need to say that in Nasdaq, we officially have now the very big bearish trend some minutes ago. In S&P, still the long-term trend is up, but we are in a very bearish momentum on higher time frames. In Euro, USD, the trend is up. The Euro could gain some more bullish momentum. The reason are, of course, not only that the ECB, the European Central Bank, mentioned they probably won't change the rates, the interest rates in European zone or Eurozone, but also we have the elections in Germany, the federal elections in Germany on February the 23rd. So that's making Euro that has found now, I can say, a solid bottom. Already in my group, the signals have already been found last year, around 3 weeks ago, but we did not mention that in YouTube. So now the open interest for Euro is also bullish. Nasdaq, the open interest, keep eye on the open interest of the market, especially S&P, gold, Nasdaq, Bitcoin, crypto if you are trading with, because that has a lot of to say. And when suddenly the open interest starts to drop, it means that very big, large traders know something. They have a lot of money, they have billions, and therefore they have also very powerful insider network information, so they get earlier informed that the private traders or retail traders, also institutionals, whatever, in case the open interest keeps dropping, you should maybe take some profits or reverse the trade, especially on higher time frames. For day traders, this week and the next week will be very, very hard, very extremely hard. We will have very high volatilities in the market at the key points, key support or resistance levels, dependent on the market momentum. That means they will suffer a lot of big losses. Which type of traders have very big edge? Of course, the trend followers. And if you trade only on daily or higher than daily time frame. Why? Because the signals are much more solid, and therefore you will survive the intraday big, very big volatility of the market. The reason that now Nasdaq started to drop was not only this earning week, which is influencing the S&P, especially the S&P 500 and Nasdaq this week. We will have a lot of earning reports of the companies, around 220 reports this and next week are awaiting us. That is making the markets very nervous. And Trump tariffs, of course. And we have to loom the Federal Reserve decision on coming Monday. Not only that, on Thursday, we will face with new GDP numbers, US GDP numbers, gross domestic products numbers, that are very important numbers of economic growth or decline of a country. So, and this is causing right now a very big volatility. Also, as you can see, the DeepSeek, this is a Chinese AI startup company, released immediately after Trump speech in Davos, that they have the latest or the best AI model currently, which is cost effective, and that runs on less powerful yet efficient clips. Of course, that is causing the AI world a lot. It is not surprising to me because Chinese, of course, never sleep, and especially as Donald Trump mentioned that the United States will be AI and cryptocurrency country number one on planet. Of course, their competitors, especially China, had a very secret plan, and that's maybe one of them. On the other side, the deals around TikTok are running. The US government wants a minimum 50% to possess 50% of TikTok company. So therefore, keep eye on that. Then we go to Bitcoin. We had a price drop offline of $5,000. Well, you see, if you are trading the news, you get the news always too late. It's not true what you can read here. The trend of Bitcoin is, of course, bullish, but the 5,000 is the continuation of 15,000 price of the last days. If you go on the daily chart and watch it, from 108 to now nearly below 100K. So do not believe always what you can read on television or whatever news platforms. Keep only disciplined, tracking your trading system with discipline. Then we have, of course, it is not something new, the Fed decision and the inflation data ahead, but interestingly, something is happening that maybe you have considered that since inauguration of President Trump. Now, less and less Fed members, especially the Fed chairman, Jerome Powell, you can see on the screens or talking. If you remember last year, we had even weeks where we had 25 Fed talks, and all those bankers came and everybody said the opposite of what is happening. But you see now, since around 2 or 3 weeks, there is a big silence there, meaning that the Fed is seriously respecting what Trump is saying. And on the other side, of course, Trump is for lower interest rates, and the Fed Jerome Powell doesn't want to play that game, so his opponent. To me, personally, it would be very interesting if I hear, for example, that Trump is pushing pressure on Jerome Powell to resign sooner, as he did it with SEC. Even the SEC chairman resignment has not too big influences or impacts currently. Therefore, the economy needs, first of all, the new data, and it takes time, of course, that they work on fundamental level. The market is, of course, pricing all these movements in, and therefore, if you go back to your technical analysis, it would be wise to follow just the price to which direction it might go, not to shake hands or to think, what does Jerome Powell say, or maybe Trump say. Of course, Trump is always good for a big surprise, but for mid and longer term, so you know his plans. Also, the oil prices, the OPEC is not going at this moment to cut the prices, and it could develop some kinds of heat tensions with oil producing countries and OPEC countries to sink or to cut their prices. As he said, also drill, baby, drill. So this is a short summary and plenty outlook now for the next days, even I can say 2 or 3 weeks. We will have a very volatile time. If you're trading CFDs, then you need to keep care on sudden moves, because the CFDs sometimes move against the future markets. The traps are, of course, bigger there before they turn into the real direction of the futures market. Keep eye on open interests of each market. That's very, very important. And also consider on the volume. If both are running against the trend, meaning that you will face soon a very buyback, meaning the contrarian trend followers or traders are attacking the trend, and so on. So keep also looking on money management. That's very important. And I wish you having a good trading.